Hey guys, what's up? How's it going? Robin here. Welcome to today's video. And in today's video, I'm going to be showing you guys what's inside my Wealthsimple Invest growth-based portfolio. So in today's video, I'm going to be showing you guys all my portfolio holdings. I'll give you guys a quick update on how the portfolio itself is actually doing. And before we do that, I just want to say really quickly, guys, if you guys want more Canadian-based content and you guys want to watch more Canadian-based investing videos, be sure to subscribe to the channel. And if you guys enjoyed this video, please be sure to give it a big thumbs up. Okay guys, so we're sitting on the homepage of my Wealthsimple growth-based portfolio, and I'm just give you guys a quick little update on like when I started this portfolio and what this portfolio actually is before we jump in on it and I give you guys more specific details. But Wealthsimple Invest is basically a robo-advisor that I started investing with about a year and a half ago in March of 2019. This is around the time I first got started with investing, and Wealthsimple Invest, which is a robo-advisor, was one of the first tools that I used to get started with investing. So a robo-advisor is basically a program that kind of almost invests for you, and it's very easy to do, and it basically takes a lot of the extra work that you would normally have to do with like putting the money in, researching stocks, different ETFs and stuff like that. You basically just put the money in and they do it for you. So when I first started investing and I didn't know anything, it was a very attractive way to get started with investing. So I started with Wealthsimple Invest robo-advisor, and to this day I still use the portfolio. I still am growing it. One of the big things I want to start doing is figuring out a plan for how I want to grow this portfolio, and as well as grow my dividend investing portfolio that I use with Wealthsimple Trade. So if you guys aren't familiar with the channel, I also have a dividend-based portfolio that I'm growing with Wealthsimple Trade, and the whole thing I'm trying to do here is trying to balance everything out so I have a little bit of everything. But this is the first portfolio I made. It's my biggest portfolio, as you guys can see. We have $50,000, $246 in the total right now as of today, and our returns are currently sitting at $2,608 in total returns. Before we jump in and I show you guys what the portfolio holdings are, I just want to do a quick little mention that in the description of this video I do have an affiliate link for Wealthsimple Invest. If you guys open a new account and you deposit a minimum of $500, you'll get $50 for free, and I'll get $50 for free. So think about it kind of like a 10% return. So if you guys want to kind of get started with investing, I think Wealthsimple Invest is a great way to get started, and you guys can use that link if you guys want to get an extra $50. Basically, if you deposit $500, you get $50 back. That's instant 10% return. So I think that's pretty good value. At least you guys should probably do that, because then you get some kind of return, and you can either take the $50 and that'll basically cover your fees for a portfolio that's around $10,000. So it's pretty good value, and I think it's a good thing because all you have to do is put the money in. You don't have to like hook up a bank account, you don't have to have auto deposits or anything like that. I think it's a pretty good offer when it comes to most banks and different investment platforms. So that link is there if you guys want to check that out, and if you guys do use that link, I do appreciate it very much. But other than that, let's check out the portfolio. So I'm going to look at my deposits over the past little while first. First thing we're going to talk about. So you guys can see here kind of towards the beginning of this year, this was my main portfolio I was investing into, and I was putting in April we put in $550, in May we put $1,450, in June we put $1,450, and then July we kind of tapered down a little bit, and this is around the time I started kind of focusing more on my dividend portfolio. I'm going to probably start putting a little bit more money back into this portfolio because there's lots of diversification, and I like the fact that this portfolio has a lot of US and foreign based stocks, specifically more US based stocks, because they do really, really well, and some of the ETFs they have, like the Vanguard ones, are really, really solid. So I really got to come up with like some type of breakdown where like maybe per month I put like maybe like 40% into my dividend portfolio, and then like maybe 20% into my REITs, and then maybe put like 40% into my growth-based stocks here on my Wealthsimple Invest account. I got to kind of do that, and that's one of the main goals I want to start doing, so I can kind of have some kind of plan where I have like a lot of diversification, but I'm also kind of growing all my portfolios. And it's kind of like the struggles when you kind of have this kind of thing going on. So that's kind of what I've been doing. But that's definitely one of the goals I need to focus on. If we go over the returns here, we can see here that we're, like I mentioned before, we were up $2,609. And if we go to a simple percentage, that is about 3.5%. So obviously this portfolio got hit pretty hard when the crash happened earlier this year, and we're kind of just slowly recovering from it. But we're doing quite well. I'm pretty happy that the portfolio is actually in the positive, because there's a lot of people right now who've invested since the market crash, and they're still kind of sitting in a rough spot. And as you guys can see here, we have the risk level of 10, which basically means that this is like a really strongly based, high equity, high growth based portfolio. So this isn't like a dividend based portfolio. There is pretty decent dividends overall. I think it's like a 2 to 3% yield, maybe kind of on the lower side of the 2% yield. So not a super high yield, but it's mostly in the growth, right? It's in those stocks growing over time kind of thing, with a little bit of dividend income sprinkled in. So we're going to look at the holdings here, and then what I'm going to do is we'll go over the dividends and the earnings probably lastly in this video, just to kind of show you guys how I've done overall. So here's the interesting thing about the portfolio, and this is going to give you guys an idea of kind of what's been working for me and what's kind of going well in the market right now, which is kind of interesting. So the first thing we have here is this portfolio is 90% equity, and that's because, like I mentioned, it is in the growth portfolio. The growth portfolio is 90% equity, 10% bonds. So heavily favored in stocks, and it's heavily favored in growth-based stocks. So the first fund we have, which is also the highest weighted fund in the portfolio, we have 22.6% into a US-based fund, VTI. This is one of the best Vanguard-based funds for US stocks. I actually did a video of it earlier, so you guys can check out the review video if you want. But Wealthsimple Invest values this as being like the best base growth based ETF, and I think it is too. With $11,000 in market value, with 50 shares, we are sitting at a 10.6% return for VTI. And it's kind of funny because if we actually go to Google and we type in VTI stock and we look at the actual returns over the course of the year, just before the market crash in February, kind of mid-February, where the fund was sitting at $172 US, and we're currently sitting at basically about the same. So if you were to do like the year-to-date return of VTI from the beginning of 2020 to where we are today, you're sitting at like a 0%. So when we look at our portfolio and we're looking like, why is my portfolio from VTI sitting up 10.6%? Well, this is because throughout this whole entire little dip here, I was investing money into my Wealthsimple account, and Wealthsimple was taking that money and sticking the most of it, the vast majority of it, into VTI. So over time, kind of as we dipped here and we kind of slowly put more money in, we slowly put more money in, we slowly put more money in, as the value went back up, we got to see some nice gains. And this is the value of investing during a period of time when stocks are down, because if you didn't put any money in for this year, for example, you'd be sitting at 0% right now, right? Because you basically take what you'd had here, right? Maybe in January, you might even be sitting at a loss, actually, or you would be sitting at a tiny bit of a gain maybe, but you take basically what you had in January, which is 166, and then you take what you have now, which is 170, which is, I guess, a slight little gain there. So the value of investing over a period of time is, especially when stocks are low, is very beneficial, and you can actually come out on top. So I just wanted to talk about that. That's something that I think a lot of beginners and even myself didn't really realize until I actually did it. Now, obviously, not all negative years or years where we had those dips kind of work out this way, but it happened to work pretty good. So our VTI ETF is currently sitting at 10.6%, and this is kind of bringing up the bulk of the portfolio, as everything else is kind of lagging behind to some degree, but we're starting to see a little bit of a boost over the overall market, which is nice. The next up we have is XEF, which is the international based equities, and you can see that the international ones are not doing as well as the US based stocks. They're currently sitting at 0.8%, but they have been rising over the past month or so that's pretty good news. And I think over time we'll start to see everything kind of pick up overall. But we have $11,000 in this one, and with 365 shares, and this is the second most weighted one at 22%, so it's actually just behind VTI, but we do have more US stocks inside this fund, so you'll see here. The next one we have is EEMV, which is emerging market equities, and this is probably one of the ones that's been hit the most by the market crash that happened earlier this year. We have $8,000, so it's still pretty significant inside this portfolio, sitting at negative 2.6%. So I remember earlier this year, this was like at negative 8 or negative 10 or 11. So overall, as we've been adding more money into this portfolio, this fund has kind of risen a little bit. But if you do the same comparison, right, if we type EEMV stock into Google, we can see that 1 year return just before the market crash, in January 2020, we were sitting at $59 US. We are now sitting at about $56 US. So still, a little bit down, but because if you put money in on a regular basis, it will kind of grow. So if you would have been investing, if you put a lot of money into EMV during this period of time, you would probably be sitting at a pretty significant gain right now, maybe sitting at like a +5 or something like that. So you actually come out on top. And that's once again, the importance of regular investments will basically allow you to just grow over time regardless of what the market does. which is important to do that. Next up we have is XIC. This is the Canadian funds, and you can see here that even though Wealthsimple is a Canadian-based robo-advisor, it doesn't actually have a lot of money in Canadian stocks. It's got a little bit, but not a ton. And XIC is a pretty solid fund. It's mostly a growth/dividend-based fund, and we have $5,735, 220 shares with 1.1% return. So Canadian stocks have they've been kind of up and down over the past couple days if you've been following my Wealthsimple trade case study, but they're kind of starting to kind of go up. When I do, whoops, I didn't mean to click on that. When we do our my portfolio updates for the next couple days, you guys will see that it's kind of up and down across the board, but our actual Canadian stocks are sitting at a little bit more of a gain in our actually Wealthsimple trade account because we've been buying throughout the dip kind of thing. Next up we have is ACWV. This is another global equities, mostly US stocks with a little bit of everything in it, and this is once again kind of a reflection of XEF, kind of on the lower side with EMV, right? Still not quite recovered yet, but slowly kind of getting there. And it's also the lowest weighted fund, so the least amount of money in our portfolio is sitting in there and has been deposited throughout the dip. And next up we have is US equities, VUS. This is a Canadian hedge fund, 5.8%, a very small percentage of the portfolio, only about $3,000, I guess. 46 shares with a 12% gain, so not too shabby. But this is mostly like the Canadian hedge version of VTI. Very similar. So you can see that obviously because it's a US based fund, it's up quite a bit, sitting at 12%, just slightly over VTI. And then at the bottom here, we have our bonds, which aren't super impactful in the portfolio, but they do provide a little bit of extra income, and they are doing pretty decently well. Our ZFL government bond is currently sitting at 10% return right now. And of course, once stocks kind of recover, this might kind of go down, but it's not too shabby for now. And then we have QTIP, which is a Canadian hedged US fund that they picked for this portfolio, and it's sitting at 7.7 performance. So right now bonds are doing well, but obviously it's the long term that matters, and as stocks kind of go up, bonds tend to go down. If stocks are down, bonds kind of tend to go up. So over time the stocks will probably perform better and the bonds will kind of more balance out. They're obviously high right now. That's kind of just a reflection of the market. So that's the holdings of this portfolio. If you guys have any questions about any of this stuff, just please let me know in the comment section. I'll get back to them as much as possible. Let's take a quick peek at the dividends. And the cool thing about September is that we're approaching the third quarter of the year, and the vast majority of these funds actually pay a dividend coming towards the end of September. So we should see some nice dividends coming into this account. But I'm going to sort this by dividends here. So we'll click dividends and interest so we can actually see just our dividends. And once again, you guys can see, like, for September, nothing too much is coming yet other than our bond payments. There's one from ZFL, $7.65. But towards the end of the month, and I'll probably do an update towards the end of the month where I go over all my portfolios, you guys will see that we'll have some big dividend payments coming in. And you can see here's the other dividends payments kind of coming throughout the year. Obviously in June and July, there's some big ones because that's the middle of the year, that's the second quarter. So as you guys can see, there's some big dividend payments obviously coming from some of those ETFs. And then March as well. If you go down to March here, we can see there's some bigger dividend payments because these are the big ETFs kind of paying out for their quarter kind of thing. And we'll get a big one in September, and then towards the end of the year in December, we'll get another big one because everything pays out kind of towards the end of the year. So that's basically how the dividends have been in this portfolio. But once again, this isn't a heavy dividend-based portfolio. It's mostly growth, but those dividends do matter, and we have been reinvesting them on a regular basis. Okay, we'll go back here. Alright guys, so that's it for this video. Let me know what you guys think in the comment section. Let me know if you guys have any questions about Wealthsimple, Wealthsimple Invest. And once again, if you guys aren't following the channel, if you guys are new, be sure to check out I'll put a link in the playlist of this video. It goes to my dividend investing case study. Check that out if you guys want to see how I built a dividend portfolio completely from scratch on this channel. If you guys are new to investing and that kind of thing interests you. So hope you guys enjoyed this video. Once again, if you did enjoy it, please give it a big thumbs up. It really helps the channel out. And if you guys want to see more Canadian based content and you guys want to follow along with me as I build out these portfolios, please be sure to subscribe to the channel. So thanks for joining me today, guys. I hope you guys enjoyed the video, and I'll see you guys later.